Yo, what is going on, everybody? Welcome back to another video here on the channel. For today's video, I'm back with another stock talk video, and for today's stock talk video, we're going to be talking about the stock DraftKings, ticker symbol DKNG. Guys, if you are new here to the channel, don't forget to hit that like button and subscribe for more content. Also, click the link down below in my description to follow me on my TikTok, and also join my Discord server. Both of those links will be down in the description below. This morning, we received a short report from Hindenburg, which is a very well-known short analyst company that tends to short stocks a lot of the time, which means they put out negative information about a bunch of companies, causing the stock to fall. And well, this morning they came out with a news article that was shorting the stock DraftKings. But before we get into that, let's kind of dive deep into the chart of DraftKings and see what we're dealing with. This morning the stock was trading around $51 before the report came out, and when it did, the stock dropped from 51 all the way down to lows around 44 this morning before recovering very quickly at open. And once it recovered, it kept on going and moved upward higher and higher, and now kind of stagnated, but is still uptrending throughout the day. But Hindenburg comes out with these short seller reports, and they've done this in the past with Nikola, Clover, and even Lordstown Motors Ride. Nikola ended up being true and basically just a scam electric vehicle company. And when Hindenburg made an article on Ride, this stock completely tanked down and hasn't recovered since then. Basically, this is just a pump and dump within the electric vehicle sector as well. So back to the chart of DraftKings. They IPO'd last May through a SPAC through a company called SB Tech. Now, when the SPAC merger went through, the stock actually ran up quite a bit afterwards, and really throughout all the rest of 2020 into 2021 it was pretty strong before pulling back with the rest of the market, and here we are right now. So here is the Hindenburg research website, and this is the DraftKings article that they came out about that's really just tanking the overall stock with a bunch of negative news. And a lot of these bullet points and a lot of the reasons as to why the stock was being beat down so much is because of this SB Tech. Now, if we check out this other news article that came out, Hindenburg claims that SB Tech has a number of black market dealings. SB Tech is the company that DraftKings went through with a SPAC with, and SB Tech is providing sports betting infrastructure to customers in markets where sports betting is still illegal. And based on conversations with former employees, Hindenburg estimates that 50% of SB Tech's revenue comes from black market dealings. But right here it says we cannot verify if this is true. It sounds like it very well could be true. And you know what? Even if you don't know too much about the stock DraftKings or the company itself, these short seller reports are meant to scare people. Now, there has been a bunch of information put into that short news article that could lead to something more, correct? And it could lead to the company having to come out and kind of deal with these allegations. But really, 90% of short reports have to do with just scaring the actual investors like you and I. And DraftKings has to do with a lot of different sporting events in the US, such as the NBA, the NFL, NASCAR, UFC, PGA Tour, a whole bunch of sporting events that have to do with DraftKings. Now, Hindenburg came out with a short article mainly to just plummet the stock and scare investors. And until we get some news and information, someone from DraftKings talking about whether or not these allegations and these attacks towards DraftKings are true or not, then all of this is kind of just rumor and speculation. Hindenburg also stated they want a third-party audit to go in and see the revenue and growth from DraftKings to see how really legitimate it was. But the big question of the day is whether or not DraftKings is a buy right now. We seem to have bounced around this bottom right here on $41, and from there we've been running up but have fallen back recently just with the overall market and then the short seller report. If we look at the bigger picture and look more long term over the next few months to even few years, we can see downside we only have about 16% still, but upside to previous all-time highs, we have about 55% of upside. And starting a small position here on DraftKings around $48, having that much upside, and if you're not afraid of holding for a longer time period, this is a great deal. Now, in the short term, let's wait a little bit and hold out to see where this news article takes us and what DraftKings and the company has to say about it. Let's wait for the CEO and whoever has to come out and start talking about these allegations. Let's wait for them to talk about it, start to reveal some good information, and figure out whether or not some of these allegations are true or not. They very well could be true because Hindenburg sometimes does come out with information that ends up being truthful, which could cause a stock to drop even more. And coming down here to this $40 area, that'd be even a better deal. So in the short term, let's sit the sidelines and see what happens. But if you're interested in going long term, starting a position here at $48 is not a bad idea. Being able to average down, leave some capital on the side, starting a small position here, averaging down over time, buying those dips, and having a long-term conviction position with this stock of the company is a great way to start with it. I see that $48 as being a pretty good deal on this stock. Again, with sports starting to reopen and becoming more popular even into the summer and into this fall, and with different areas around the country starting to open up more with gambling and online gambling, this is a great stock to get into. So if you're looking for the short term, again, I would sit on the sidelines and wait until we get some more information about whether or not these allegations are true or not. But if you're looking to get into the long term, starting a position here at $48, being able to average down and buy some dips with leaving some capital on the sidelines, and then letting it go over time, and eventually this stock will recover after being beaten down, not only from the overall market, but from short reports. And guys, that's my take on DraftKings and what I believe in it. I think right now is a great buying opportunity if you're able to go long term and leave some capital in there for a little while. I think DraftKings overall is still a really good company, no matter who they went through with a SPAC deal with. And guys, hopefully you guys enjoyed this video today and learned something about the recent DraftKings news. Leave a like if you did, subscribe for more content, and I will catch you guys in the next video. Peace out, everybody.